Alright, I have two things to say. One, I'm Mr. Noto, and also two, for everyone else, I told you, I just made a video like 3 days back talking about how everyone was completely overreacting to Robinhood's news and how it might impact SOFI. And yes, there will be some type of impact. Yes, they are doing things that maybe might encroach on SOFI's, I guess, territory, quote unquote. But just watch that previous video, and I just want to talk about Anthony's response to everyone that was freaking out about Robinhood having banking. Okay, and literally, you just have to rewatch my previous video on SOFI to basically get the gist of this message. Or basically, this was a summary of my previous video. And he posted this yesterday. I posted my video like 3 days ago. Anyways, let's just go through it if you haven't already read it. Basically, he just says, y'all need to calm the heck down. SOFI is GOAT, so sit down and let us execute. Rest assured, I see and read every word about our company, our team, and me. It takes great restraint not to reply and correct the massive disconnect between what is critical to do and when to do it versus what is not critical to do. As I said in my previous video, sports betting is not critical for SOFI, okay? Level 1 option or level 2 option, so selling options, is not critical for SOFI. It's a nice to do, it's a nice thing to get off the bucket list, but based off of what SOFI is trying to aim for, basically having this high quality, high credit, default, not prone to default customer base, those things are not necessary for SOFI. I talk about this a lot in my previous video. He's just going over that as well. It also takes restraint not to react impulsively to defend my team for what I perceive as unfair and unjust treatment. I'm responsible for whatever does or doesn't happen, period, no excuses. Again, what I said in my previous video, he has seen so many black swans. He is the CEO. He is the chief executive officer, right? So everything goes through him before it gets okayed or denied. And honestly, in my opinion, as I said before, he's conservative and he's worried of a black swan event. He wants as sturdy of a foundation as possible before moving forward, right? So again, he doesn't want to spread himself too thin. That's what this entire quarter is about. I think that's what this entire year is about. In this Q4 earnings call, Anthony Noto talks about how they're gonna try to grow as much as possible and only use the excess funds that they have to grow as much as possible. They're not just going to advertise willy-nilly and just like throw all their money to the wind, right? They're going to have they're going to lock in that percentage of revenue, that percentage of earnings per share. And then after that, anything excess, they're going to throw that all into growth. That is how SOFI is going to grow this quarter, next quarter, probably this year. Don't get me wrong. I want everything done yesterday. Again, so this entire part is talking about what I just said previously, right? That's always been my approach, but doing everything is not realistic, and most of what people may think is important is miscalculated. Sports betting is not important. Level 1 options is not that important. Or do I strike you as a person that knows what needs to be done and decides not to do it? Or perhaps what one thinks needs to be done is not the right priority. That's not to say we are moving at a pace that we want. We never will. We make mistakes in execution that cause delays, so learning fast is critical, and we are not always as fast as we want to on everything we do. But sometimes being fast out the gate can cause one to be much slower later on, which is the case in a couple of things, only to be able to move about 5 times faster in the future. Again, as I said in my previous video, they want to have a sturdy foundation. Once you have that sturdy foundation, you can afford to move fast and fail fast. But if you don't have a sturdy foundation and you're wasting all your money on advertising, on getting as many products as possible to attract as many people as possible, and you don't have this sturdy foundation, when you fail, you are screwed. When poop hits the fan, you are screwed without a solid foundation. Again, everything I said in my previous video, a sustainable competitive advantage is the critical success factor that all should be judged. And in this sector, sustainable competitive advantage is grossly misunderstood. And for that, I could not be more grateful. You can be sure I will not correct those incorrect points of view, and I will never mention other companies in any regard. It's not who I am. This part, I I'm going to make a video about this, but a lot of people misunderstand what a moat is and what creates a competitive, sustainable advantage. Okay, a first mover's advantage is not a moat. Just because you're first to the market, that doesn't mean you have this insurmountable moat, right? There's this thing called a fast second. For example, Apple is often known as a fast second, right? They're usually not the first person to create a product, but when they do create a product, it's usually pretty damn good. For example, again, compact computers, they were before Windows, but which company is here now? A first mover's advantage is only as good and as sustainable as much as you can sustain that first mover's advantage. If there's a low barrier of entry, or it's not that hard to come back, right? Basically, if you have, like, for example, maybe you have newer tech that lets you surmount that previous moat, or let's say that you create a better product, right? That first mover advantage, completely useless. Specifically, what I think he's referring to, and in this sector, sustainable and competitive advantage is grossly misunderstood. What I think he's talking about is a lot of people, a lot of banks, they will give a lot just to be your first bank. Why? Because a lot of the times, people will not drop their first bank. There's multiple reasons why, right? For example, maybe it could be length of credit score, right? Your first bank is often who issues you your first credit card. If you have that credit card, you don't want to close it ever because of just how credit scores are calculated, right? So that could be an example of a moat that he might be talking about. Another thing he could be talking about is his banking as a service. I don't know of any other bank or fintech that have as many offerings as SOFI does, specifically for banking as a service. And let's not even touch on the fact that their customer base is such high quality and such sought after by so many firms. That in itself is also a moat. Continuing. Oh, here we go. This part hits. But we uniquely delivered durable growth and constant innovation for 20 consecutive quarters. I want everyone to just dwell on this specific line. Just dwell on that line. I'm going to say it again. Uniquely delivered durable growth and constant innovation for 20 consecutive quarters. They were able to maintain profitability when the markets are bad, when the markets are good, and throughout, as it says here, through the past 20 quarters, a lot of businesses, specifically banks, specifically brokerages, when the stock market is down, when crypto is down, when investment is down, or when the economy is down, they don't make profits, right? Those profits are down, right? But SOFI has been they've been profitable despite economic cycles. Do you understand how incredible that is? Robinhood, Robinhood's really good in economic boom, but when the economy crashes and not as many people are trading stocks, not as many people are trading crypto, right? Where's their profit going to come from? Sports betting, I guess. Competitive, sustainable advantage, again, which is different than just making announcements or just shipping. Hello, he's you're screaming it in your face. Just because you have a bunch of products doesn't mean you have a competitive and sustainable advantage. There's this thing called a fast second. Again, a first mover's advantage is not a sustainable competitive advantage. I really need to make that video about moats. Anyways, we learned this in 2019. We fixed it in 2020. I couldn't be more confident in our strategy and the sustainable competitive advantage we have and others do not. And that we will continue to build CSA, or competitive sustainable advantage, faster than anyone else. We know what we need to do, and we are fully committed to doing it. Who dares win? I don't understand this fresh horses thing. There's a few things about the moat that SOFI has, right? I said it before. It's their customer base, right? Their high quality, low default rate customer base. They're able to basically generate money without any risk. That's what their entire loan platform business is. It's their banking as a service. What does that mean? That lowers the cost of all of their things because they don't need to rely on other people's banks. They don't need to rely on other people's services because they can do everything in-house, right? That means that they can take it in the margin and still maintain a profit, whereas other people, they can't do that because they need to share some of their profit, or they have a higher overhead because they need to pay for other people's services. They have to pay for other people's things in order to keep their business running. Those are examples of an actual moat, right? Especially the banking as a service. Basically, they can, if they create the underlying infrastructure and makes it so much better and so much cheaper than what other people can do, right? Though that's an example of an actual competitive, sustainable advantage. Having that banking structure, being able to do everything in-house. What does that mean? Basically, when they have that underlying infrastructure perfected, then other people, it's cheaper for other companies to just use their service than to waste all the resources, waste all the time, waste all the trial and error on creating their own infrastructure. So they don't even have an incentive to compete with SOFI at that point, because at that point you'd waste less money if you just buy SOFI's product, buy SOFI's services, than to waste the R&D cost, to waste the time and effort, to waste the managing, right? You have to manage it after you create it, right? After you create the infrastructure, all that stuff, and you might not even be better than SOFI used, right? That is an example of a moat that SOFI has. That is I don't know. So I'm just glad that this kind of vindicated, is that the right word? This kind of vindicated my previous post or my previous video. This just makes me more and more bullish, and I'm also really glad to see that Anthony Noto is actually responding, right? It's one thing to kind of just like heads down and code, heads down and just execute, but as investors, it is really nice to see that management is actually like they're reading and watching all the media coverage, right? They're listening to what investors are saying. And even though I know that they've just been executing, this is definitely very refreshing to see management paying attention and also answering some concerns that investors have, no matter how overblown or how stupid they are, in my opinion. But yeah, that's it. That's this video on SOFI Technologies. Take some SOFI. Peace.